As we head into the final stretch of 2025, the real estate market is once again being shaped by big national moves. This week, the Federal Reserve cut its benchmark rate by a quarter point, officially marking the end of its tightening cycle. Starting December 1st, the Fed will stop reducing its balance sheet, and by 2026, it plans to expand liquidity again, essentially turning the money tap back on. So what does this mean for the housing market here in West Windsor and Plainsboro? Let's break it down. Let's start with West Windsor. October closed with 11 single-family homes, 9 townhouses, and 2 condos sold. A typical seasonal slowdown, but still a healthy market. Inventory dropped from 51 active listings in September to 36 in October. That's a 30% decline month over month. That's a clear sign of a seasonal tightening, not weakness. Even at its spring peak of around 70 homes, West Windsor stayed far below balanced levels, keeping it a seller-leaning market. Average days on market rose to 42 days, up slightly from earlier this year when listings were moving in the low 20s. That's simply seasonal normalization, not a demand drop. Inventory followed its usual cycle, climbing through the spring, peaking mid-year, and tapering off heading into the holidays. The rhythm of the market is steady and predictable, not overheated, not collapsing either. Despite longer market time, sellers are still achieving 100 to 104% of asking price. That's a strong indicator of buyer confidence. Homes that are priced right and well presented are still commanding full value. Let's take a look by the property type. Condos. 2 new listings came on the market this month. One sold at $423,000. That's 103% of list price in just 19 days. A tight market with a limited supply. Townhouses. Older resales averaged $535,000 at 96% of list price, while new construction townhomes averaged $930,000, selling at 103% of list within 2 weeks. Single-family homes still the strongest category in West Windsor. This month we saw 9 sales, averaging $941,000, about 104% of the list price, and we only have 1.6 months of supply. Adult communities, 1 sale at $615,000. That's 102% of list price in just 1 week. Still very healthy for 55+ market. Listing and pending activity peaked in spring and cooled through fall. Perfectly seasonal. Sales volume, however, remains consistent, showing that buyers are still active, just more selective. So here's the West Windsor takeaways. In short, inventory is tighter. Homes are taking a little longer to sell, but prices remain firm. This is not a correction. It's a typical autumn cooldown in a still strong market. Now let's switch to Plainsboro. Plainsboro had 10 closings in October, 2 condos, 2 townhouses, 3 single-family homes, and 3 in adult communities. Overall, inventory dropped to 31 homes, down from 46 last month, higher than last year, but well below normal range. Overall, Plainsboro sits in a balanced position, neither strongly buyer nor seller-driven. Days on market rose to 74, the longest since mid-2024, signaling a slower, more deliberate buying process. We're returning to pre-pandemic pacing, where properties take 1 to 2 months to sell. Pricing segmentation. Average sold to list ratio remained close to 100%, but results vary by type. Condos and adult communities dipped below 90%, while single-family homes continue to sell at or above 100% of list price. This reflects a more price-sensitive data-aware buyer pool. So let's take a look by different property types. Condos, 2 sales at 295,500. So that was 89% of list price after 55 days on the market. This is a price-sensitive segment. Townhouses, 2 sales at 758,000, 99% of list and 56 days on the market. This is still shows it has a steady demand. Single-family homes, we saw 3 sales at close to 1.5 million, and that's equivalent to 103% of list price and 45 days on the market. That's a standout performer. And back to adult communities, there were 3 sales at an average price of 475,000 and 85 of list price after 108 days. It's getting softer but still moving. So, like West Windsor, Plainsboro's activity peaked in the spring and slowed into the fourth quarter, but transaction flow remains healthy. Buyers are still out there, just taking their time. So here's the takeaway for Plainsboro. The market is cooling faster than West Windsor, but staying steady overall. This is what a balanced post-pandemic market looks like. Moderate volume, realistic pricing, and stable values. Besides the for-sale market, let's also don't forget the rental market here. So here's an update. First, the West Windsor rental market. The rental market in West Windsor continues to face headwinds from oversupply, especially from new construction townhomes and condos. In October, there were new 5 listings and 1 rented. Older units averaged 2,450 and leased in 36 days at 98% of list price, while new condos averaged 1,800 and took more than 100 days to rent. Townhouses, there were 14 total listings, 4 older ones and 10 new ones. Older townhomes averaged 3,800, renting in about 35 days at 101% of list price, where newer builds are sitting much longer, with nearly 19 months of supply. And single-family homes, we saw 3 listings, average 4,700 per month, leased in about 31 days at 95% of asking price. Overall, West Windsor's rental market is saturated, and this imbalance will take time, likely well into 2026, to be absorbed. For landlords of older properties, remember this. In an environment flooded with brand new rentals, location, condition, and price must align perfectly to attract potential tenants. If even one of those factors is off, your property will sit on the market for much longer than expected. With months of supply ranging from 5 to 20 months, this is firmly a tenant's market, and landlords should expect longer lease-up times and increased price competition this winter. Now let's take a look at the rental over Plainsboro. Plainsboro's rental market remains balanced and resilient. Without the oversupply pressures we're seeing in West Windsor, condos, we saw 4 new listings and 4 condos got rented in October, averaging $2,010, leasing in about 72 days at 95% of the list price. There were 3 townhouse listings and leasing quickly within 24 days at 98% of the asking. We saw 6 single-family homes available, and the average rent was $4,200, maintaining at 98% of list price. With only about 3 months of supply, Plainsboro continues to show healthy absorption, a sign of a strong tenant demand and stable investor returns. So here's a rental market comparison. In short, West Windsor is working through a temporary glut of new rental units, while Plainsboro continues to perform with a steady, balanced leasing activities. For landlord, that means adjusting strategy, price realistically, highlight strengths, and maintain property condition. For tenants, this is one of the best negotiation windows in recent years, particularly in West Windsor. So how does this tie back to the Fed's move? Lower rates will improve affordability and bring some buyers back. But if easing continues too quickly, price could strengthen again. Many homeowners remain locked in by low mortgage rates, limiting new listings and keeping supply tight. For buyers, that means acting strategically, focus on value and long-term affordability. For sellers, on the other hand, preparation and presentation are key. Today's buyers are very selective and expect move-in ready homes. And for homeowners and investors, this shift points to a soft landing with a steady equity and stable values heading into 2026. If you'd like to know how these trends might impact your next move, whether you're buying, selling, or investing, I'd love to walk you through your numbers one-on-one. This is your October market update for West Windsor and Plainsboro. I'm Nicole, a local realtor with Queenston Realty, and see you next month for November's update.